Hi guys, welcome to our third video in our series. Why do we trade the US equity markets? Why do we invest in the US equity markets? What are the benefits, the drawbacks? How do US equity markets work? How do we make money? Long-term, short-term, mid-term, intraday? Let's talk about long-term. So what happens in the long term? In the long term, a lot of things can happen. Let's see the example of this phenomenon called today the best company in the world, Nvidia. A long time ago, $5.70. At one point, $1,255. So the stock went from $5, let's round things up, from $6 to $1,200. That's times how much is it? 600? Sorry. 200, that's adding 2%, two zeros, that's 20,000%. So this move from 6 to 1260, I'm just rounding things up, is 20,000%. How much time did it take? You can see that's 2009, that's 2023, so took some time. Again, what is your time frame? Is time frame has anything to do with the success of the stock? Of course, you know that it has nothing to do. But there are those stocks that grow exponentially over time. Nvidia was one of them. Apple is one of them. Just type Apple, how much Apple return from its IPO on ChatGPT, and you'll see a crazy number. Okay, so that's you know that there's money to be made investing long term. What is the definition of long term? For many investors, it's 10 years, maybe 50 years. For you, you decide. So there are investors that the long term is 6 months and maybe 12 months. Others, the long term is 50 years. That's one side of the coin. So what happens when things go wrong? This is an example where things went very good for Nvidia investors, and they got very, very rich. Good for them. Now let's see an example where some investors were disappointed. Let's see Beyond Meat. Remember, guys, this company? Beyond Meat was bonanza just 5 years ago. Sorry, 6 years ago. So the stock was IPO'd at $60. All-time highs in the stock, let me round things up for you so you'll know. Here it is on the chart, $240. Fast forward to today, hold on. The stock price went from 240 to, how much is it today? 350. So roughly 98% of the value vanished. And it took 6 years. So what's happening here? How many investors stayed the course from, let's say, 60 or 100 to $3? I'm guessing not too many. But you know, that's an example of what a long term can do. You can make a fortune, and you can lose. In this case, you can lose only 100% of your investment. You cannot lose more than 100%. While on the long term, you can make 20,000%. That's the number in Nvidia. And if you go to Apple, maybe the number is even crazier, or Google, or some other, Amazon and stuff. So on the long term, stocks can go ballistic, and some of them will go to zero. So you invest, assuming you exit. I mean, obviously, if you bought it at 60, you should have a plan what happens if it drops to 20, 30, and zero. No, that's part of our discussion. Now we've seen that there's money to be made long term in stocks. I hope that's obviously clear to everybody. Now let's talk about the short term. What happened intraday? Let's go back to our example from the last video, and we showed this company, Solar Edge. This is a company in the solar technology, and this is the chart, and this is the price section. So how much money can you make trading Solar Edge on July 3rd? Okay, let's say you enter the trade and you buy it at 25.50. We'll ignore the stop losses just to make a point. And you sell it at 26.50. So you made $1 per one share. You say, let's say you bought 500 shares, you made $500. That's intraday. Obviously, if you bought only 10 shares, you made $10. And if you bought 5,000 shares, you know the numbers. Now, what are the benefits of the US equity markets is that you can trade small positions or you can trade huge positions. And let me show you the volume on this stock. You can see here the volume in the stock yesterday, which was for half a day. It traded 9.5 million shares per 3.5 hours. That means that the liquidity is very, very good. Now, if you want to know how much liquidity is per one 3-minute bar, all you do is look at that bar, and it's going to tell you at the top of the chart, immediately I will show you where, that the volume was 88 million shares per 3-minute bar. Okay, 88 million shares per 3-minute bar. How does it make sense? Maybe yes, maybe no. The idea here is that's the real number, because overall it traded, hold on, is it, sorry, not 88, 88,000 shares, 88,000 shares. I hope I'm not misleading anyone. 88,000 shares per 3-minute bar. And again, where do you see it? This is the number. Let's return, and this is the number here. Hold on a second. This is the volume part. So if I'm going to the to this 3-minute bar again. So again, if you want to buy 500 shares out of 88,000, it's meaningless. If you want to buy 1,000 shares, it's meaningless. If you want to buy 20,000 shares, maybe there's a problem and you're not going to get filled exactly where you wanted to. But that's beside our discussion. I just wanted to show you that the liquidity is very, very good. Not on all of the shares, on most of the shares. Okay, and most of the shares that a smart day trader will go for are very good in terms of liquidity, meaning he will try to buy a position, let's say anywhere between 500 and 2,000 shares, and he will get filled almost or close, very close to the price that he wanted to get filled. So this is the idea of day trading. You make money when the stock moves higher by buying, you make money when the stock goes lower by selling, and you enjoy the tremendous liquidity of the US equity markets. And this is super important because you have very good control over the price. And let's say you want to sell at $1 profit, you'll have a buyer. Okay, that's the meaning of liquidity. Of course, when the stock trades 9 million shares per 3 hours, 3.5 hours, and you can divide and see how many shares are being traded per minute and per second. Trust me, this liquidity is the best by any stock market in the world by a factor, a huge factor. And again, you want to know more, ask ChatGPT. So here it is, a clear example on how you make money. And this is not an important stock. This is just a random stock that I picked from a list. Now, can you make a lot of money? Can you make $100 per share in a given day trading the US equity markets? Now, of course, this is not live, and there is no class in front of me, and if I'll ask people, some will say yes and some will say no, and I have to say highly unlikely. Okay, highly unlikely that you're gonna make $100 per share in one given day, although there are stocks that are, you know, $5,000 per share, or I don't know, maybe $10,000 per share, but those are very, very few. Okay, but let me show you an example of yesterday. So we didn't have to go far. Let's take a look at this stock, Bitmine. This is the price action of Bitmine yesterday. And again, it traded only 3.5 hours. So you can see July 3rd, 9:30 in the morning at the bottom of the chart. Okay, you can see that the price is, let's round things up, I will say $58. And it starts trading here at $58. And the price goes higher and lower and higher. And at the top of the day, it reaches $161, which is more than $100 per one share. So can you get rich trading the US equity markets? Yes, you can. You need to apply yourself. You need to be very smart, very aggressive. But per each one share, if you bought it under 60 and sold it at 161, you got $100 per share. Again, this by any means does not is not a representation of what day trading is about. Day trading is about this type of trades. Hold on a second. Let me show you actually a better one. Where is it? Here it is. This is day trading, basically, about this type of a trade. You buy at 28, you risk, let's say in this case 1%, meaning 28 cents, and the stock moves higher. At one point you'll sell. This is day trading. And now you as a day trader decide, you want to buy 100 shares and it goes up $1, you make $100. You can buy in this case 500 shares. $1 means $500, and you can buy 1,000 shares, 2,000 shares. I don't know if you can buy 20,000 shares in this bar up. The overall volume in that bar was 92,000 shares, but let's not get ahead of ourselves and exaggerate and get so greedy. But this is beside the point. Okay, how do you know out of 6,000 stocks to look at AAOI exactly? That's the symbol of the stock. Okay, guys, that's the symbol AAOI. I don't know what this company is doing anything like that. I'm just looking at the chart. So that's AAOI. Yesterday it traded up overall and closed up 7%. You can see the volume was nearly 7 million. Okay, fine. But how do you know out of 6,000 stocks to be at the right place at the right time and trade AOI at 28? Like I said, there is Nvidia, there is Apple, there is Google, there is Microsoft, there is Netflix, there is Walmart, there is Tesla, there is like 100 companies in the US equity markets more valuable, more attractive to investors than this stock. So why this stock? This is basically the job of a day trader, to locate the right stocks at the right time and make a profit. How simple is that? Well, guess what, guys? It's not very simple. If it was simple, nobody was working at any factory or McDonald's or basically nowhere. Everybody was sitting at home in front of, or not at home, even at the beach, and doing this seemingly easy job. So what looks simply and simple and easy, it's not. It's very complicated, and it's a job. So now let's go back to what day trading is before we get to our fourth video, and I think we're going to need more videos by the way we're processing and the questions that I'm getting from time to time. So day trading is a job. Some people describe it as sitting on the beach and trading and drinking whatever, whiskey and other beverages. It's not. It's a job where you need to apply yourself for 5 hours per day. You need to prepare the trading day. We're going to discuss all those ugly parts of day trading and unpleasant in our next video.